Hello investors, welcome to the channel where I use technical analysis to find possible swing trades. Before beginning, I have to make it clear I'm not a financial advisor. Everything I discuss is for informational, educational, and entertainment purposes. The technical indicators I use are not accurate 100% of the time. Fundamentals of a company and macroeconomic factors can drive share price changes differently than what we might expect based on technical indicators. My goal here is simply to bring these companies to your attention so you can decide for yourself whether or not they're good investments for you. So please, if you plan on investing, do your own due diligence before purchasing shares in any company or consult with a financial advisor. Now that said, today we're going to take a look at Sonos Incorporated, ticker symbol SONO. This is a microcap company with a market cap just under $2 billion. They're based in the United States and they manufacture multi-room and high-end audio products, speakers, Bluetooth speakers, anything to do with speakers and sound. Taking a look at the annual chart, you'll see this price had a gigantic gap down recently. And the price continued to go down and down and down by lesser and lesser margins. And then finally, yesterday, we had a first green day, although it is a very slight green day. So looking at the chart, it looks like price gap down, and I'll admit or point out that it is after earnings, and it looked like it reached the bottom. It is now below all the moving averages and is pretty close to the 52-week low. We scroll down to the RSI, you'll see it is well into oversold and appears to be flagging sideways. The stochastics are both oversold and they are curving around, at least curving sideways, if not turning up again. The volume chart shows, as you might expect, a giant spike in selling pressure, which is declining, and is finally replaced with buying pressure. And the MACD shows a huge move down below zero that has reached a trough and is now starting to climb back in a positive direction. And just for a very brief look at the fundamentals on Sonos, switch over here to E-Trade. See, it has a decent amount of short interest, but also a good amount of institutional ownership. The company has no long-term debt, which I find interesting. It does have significant liabilities and assets, accounts payable, that sort of thing, but no long-term debt. Because it did not turn a profit on the last earnings report, a lot of these are going to look very bad. A lot of these statistics here, PE ratio doesn't have PE ratio because it didn't earn money. Same with cash flow, return on assets and equity. These are all negative by a bit. And you see the growth rate is surprisingly average for the industry, which is surprising for something that loses money. But the real shocker here to me is the gross margin is still greater than 75% of companies in household electronics industry. And even operating margin is greater than 75% of other companies. How narrow must the margins be in this industry if a company can beat out 3/4 of its peers and still not make money? I mean, that must be just an extremely brutal, cutthroat industry. Anyhow, that said, I think given this giant gap down, this could be a good buying opportunity for Sonos. But I'm interested to hear what you think in the comments below. And if you got something out of this video, I'd really appreciate it if you hit the like button and subscribe to help out the channel. And if you like these brief overviews of possible swing trades, please do all the things, like, subscribe, and leave a comment for the YouTube algorithm. And even if you want to leave a negative comment, I'm certainly willing to listen, and they help out the channel too. But now, if you'd like me to take a look at a particular company using the indicators I present here, just mention that in the comment section, and I'll try to get to it as soon as I can. That's all for today. Thanks for watching, and good luck with all your investments.